Japanese yen sell-off was the main theme over thin holiday markets as the US dollar-Japanese yen soared to a 27-month high and broke a key resistance level at 85.51. Shinzo Abe was elected by Parliament as Prime Minister on Wednesday, after his party won a landslide victory in an election earlier this month. Abe reiterated his strong pledge to pressure the Bank of Japan into bold monetary easing and setting a 2% inflation target. He is expected to appoint a cabinet of close allies, and some analysts said there seems to be a broad consensus among politicians on stronger Bank of Japan actions. Meanwhile, the new finance minister Taro Aso said today that Abe has instructed him to formulate a stimulus package, while new economics minister Akiya Amari said that the yen needs to maintain the recent downward trend. Also, the Bank of Japan minutes released earlier this week noted that some members proposed open-ended asset purchases until hitting the current 1% inflation target. After all, the broad pressure on the Japanese yen remains on. Technically, US dollar-Japanese yen's break of 85.51 resistance is an important sign of long-term trend reversal that could pave the way back to the 100 psychological level. Euro-Japanese yen showed reversal indication much earlier and is heading back to 120 and above. British pound-Japanese yen's reversal still needs a strong break of 140 to confirm, but based on the outlook in yen crosses elsewhere, it's likely that British pound-Japanese yen would head back towards 160 in the medium term. The dollar recovered against most other major currencies but got stuck in range against the euro and Swiss franc as the fiscal cliff deadline looms. President Obama will make a final attempt to avert the so-called fiscal cliff, which would bring huge tax hikes and spending cuts in 2013. House Speaker Boehner urged yesterday that the Senate must act first, and promised that the House would weigh whatever the Senate approves. Boehner said that the House will either consider to accept the bills or send them back to Senate with amendments. Treasury Commissioner warned that extraordinary measures will be taken to postpone a U.S. default into early 2013 if negotiations carry on. The actions would include halting sales of certain securities and stopping new debt issuances. On the date